Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, December 11th. We're looking at the last couple of days of the SPY ETF's market profile. And a pretty bizarre day to say the least. Light volume again, 50 million. Very tough readable day. I mean, the algorithms were very accommodating this week. I guess they wanted to throw us a curveball today to keep us on our feet. It was a green day, but nothing to write home about. It was very neutral later in the afternoon, as I'll get to in a minute, but not the easiest day to read. We got to some very visual points and then just stopped on a dime. We took out both sides of the initial balance in SPY and ES, but yet we didn't get the overnight lows or high, although we got close to them. I'm going to show you first the Russell, the IWM. Nice 4-day balance. They looked above yesterday's high in B period, only to come back in. You talk about the hair on your neck should stand up. Now, they didn't get to the day's low, but they certainly gave it a good effort down and including F period. Once G couldn't take out F's low, that should have been a sign for any shorts that this continuing down might have run out of steam. And once H took out G's high, that certainly took that off the table. But they are in a 4-day balance. Triple Qs. One time framing down now, 3 days, inside day today. Closed at the top of it. Doesn't mean we're going to come out of it to the upside on Monday, but for now it's an inside day, which should set up a very nice trade opportunity on Monday. They did the same thing basically as us. It's kind of a V shape today. Now, as far as the SPY is concerned, we opened at the lower end, took out the day's low, but really got no traction. And then actually, we just looked below yesterday's low. We didn't even get that other daily low prior to getting to the gap fill. So I was like, wow, is this a look below? And we're going to come back in, and now you have to look for the other extreme? Well, initially, it certainly looked like we might get that in A and B, but they put the brakes on that really quick, only to take out the day's low again and still not get the gap fill. Missed it by 14 cents and couldn't even get the overnight. We have a poor low. So the weekly low is now poor. We are still one time framing up for the week. But that becomes a target. Because not only is it weak, not only is it a poor low, it's a weekly low. And we still have a little bit of that gap. So it's going to be interesting to see as we go forward. As far as my trades today, I did take a short in A period. As we came back, we opened, went up, came back through the open. I'm like, well, we should at least test today's low, and that's what we did. I traded today's expirations, and those were the 366 puts I took. So I made, that trade worked out nicely for me. B period. I didn't get on board right away with a long when we took out A's high, but once B started coming back down, I thought we had the lowest accepted price in B, where we opened right where A closed, only went down a couple of pennies, went straight up. I'm like, well, if that holds, I'll be okay. So I did take a long, a 365 call, nothing big, and I didn't buy it up here. I bought it right around A's high. But as soon as C came down and C took out B's low, got out of the trade, put it to bed. Lost small on that. E period. Again, I took a short initially when we took out A's low, went down. I'm like, well, we're going to go fill this gap. Kept coming back in. I finally took it off the table and broke even. I was like, forget it. Finally, in F, I was like, okay. When F came, couldn't take out E's high, came back down through through A's low, and started making its way till E. I finally got on board with a short again, the 366 puts. Those worked out. Didn't get the gap, but they worked out. I was still holding a little bit, saying there's no way we're not going to get the overnight low and the gap fill. Well, once G opened and we saw that wasn't going to happen, I took it off. And I did it actually a couple of times in F and G where I did short it and took, added when it went back, took it off as it came back in because it was not getting the acceleration, tempo, or volume that I was looking for. So they worked out, but certainly didn't get as much as I wanted. Then in H turned out to be one of my better trades. We finally stopped the one-time framing down. I was like, well, F, everybody's short here, right? C, D, E, F, and G. These shorts are getting trapped. Now, was I expecting with this to happen? Absolutely not. I certainly didn't hold on that long, but I held on long enough and took them off, the rest of them off right above the open. And I was actually looking for an afternoon rally high and then thought maybe we'd come back down and take out the poor low. I mean, we lowered the POC. We had a poor low. We had lower value all day. And just didn't happen. So I took off the long. I actually took a small short. Saw that that wasn't going to work. Above C, got out. And that was the last trade I did. Because like I said, the end of I and J through M, I was pretty neutral. Didn't know if we were going to go trend. Didn't know if we were going to just give it back up. And I stayed out of it to keep my day. Destinations for Monday. First one on the upside is today's high of 366.58. Then that POC, which we never got to, we almost did today, but it was a downside, now becomes an upside. 366.71, 11 wide. 367.86 daily high. 368.59, the single prints from the 9th get filled at 93, and you should have the all-time high, which is now a weekly high, and the overnight all-time high. For the downside, I'm using L. I don't like it, but I have nothing to lean on, so I'm just using it as kind of a reference point. L's low as a pullback of 365.46. Then we don't have anything until we get more market-generated information to today's low. So if I wasn't using L's low, our first destination would be today's low. We settled at 366.14. That's almost $3 lower. So again, if all this was shorts covering and everything else, again, we'll see. I mean, we have wide destinations and reference points. So 363.26, weekly low, poor low. And then fill in the gap at 363.12. It's only 14 points now. And then you should have, I'll give them to you really quick, 361.22, 9 wide from the 30th. 360.66 afternoon pullback low also from the 30th. And then 359.17 weekly low. And then fill in another small gap at 358.82, 35-point gap. So 2 weekly lows that we have are part of gaps that are very small, and one of these weekly lows is poor. So now let's go to the charts. And why is that important? Well, because we're one-time framing up, and these things become targets if they don't get some acceleration to the upside. So here's the monthly. We dipped, like I said I wouldn't have had a problem going and filling that gap, getting inside the weekly range from monthly range from last month, and then coming out of it like we did. But we didn't get the job done. Not only didn't we close the gap, we have a poor low. So I'm not thrilled about that. Even though we finished almost $2 full above last month's all-time high, I don't like the fact that we didn't get the job done on the downside. So even though it's up, one-time framing up, I'm still a little skeptical just yet. Same with the weekly. We're one-time framing up 6 weeks, but we didn't get any distance away from last week, and we're inside of last week's range. Is it still healthy? Yes, but now we'll see, right? 363.26 is this week's low. We'll see if we finally stop that. And that'll be even more interesting, because if you stop the one-time framing up, not only does the weekly come into balance, but now you're inside the previous month's all-time high. And if you get any acceptance into there, again, we start talking around the 350 level. And then the daily, I am calling it down. We're one-time framing down 2 days out of an outside day down. Now, we didn't get much out of that outside day down. That low, believe it or not, was 365.95. Well, we closed at 366.30 today. So even though we had an outside day down 2 days ago and we're one-time framing down 2 days since then, well, we really didn't get any distance away from it so far at all. So technically, we're one-time framing down 2 days. In the bigger picture, all we did was stretch the balance. It's now a 9-day balance. That's 371.05, the all-time high, and 363.26, today's low. So it's just under an $8 balance. So what does that mean in the bigger picture? Well, I think if we stop one-time framing down, well, then again, we can start the rotation possibly back to the all-time high. But if we don't stop one-time framing down and we take out last week's low, things can start to change a little more dramatically. We have the Electoral College Monday, the Fed Wednesday, quadruple expiration Friday, and Tesla the following Monday. We are not going to stay in this 9-day balance, my friends. At some point, we're going to come out of it, and it's pretty tight, so we can get a pretty good move one way or the other. Hope you had a great day trading. Have a great weekend, and we'll speak prior to the opening on Monday.